All right, let's dive in. Today, we're tackling something that, well, everyone needs to know about at some point, insurance. But let's be honest, it can feel like a bit of a black box, right? So we're breaking it all down, insurance basics, especially life and health, using this glossary of terms and foundational concepts. Think of it as our cheat sheet.
Yeah, insurance can definitely seem intimidating, but we're here to demystify it, give you the knowledge to navigate it with confidence.
Perfect. So back to basics. What even is insurance? It's not just like paying a company to worry for you, is it?
Well, not quite. It's more about transferring a specific risk from you to the company. For a fee, of course, we call that the premium. You're essentially buying peace of mind, knowing they'll cover costs if something unfortunate happens.
Okay, so like a bet on bad luck.
Uh-huh. Not exactly. The goal isn't to profit from, misfortune. Most insurance works on what's called the principle of indemnity. That means it aims to restore you to your previous financial state, not make you richer because of a loss.
Ah, that makes sense. Like with car insurance, they won't give you money for a brand new car if your old one gets totaled.
Right. Just enough to get a comparable replacement.
Yeah.
But there's a fascinating exception. Life insurance. That's what's called a valued contract, meaning it pays a set amount upon death, regardless of the actual financial loss at that time.
Hold on, so life insurance isn't just covering a loss, it's like creating an instant estate. I never thought of it that way.
Exactly. And that's often overlooked.
Okay, mind blown already. So we've got these main providers, private companies, and of course, government programs, right?
You got it. Private companies offer all those different types of policies, while the government programs, think Social Security, Medicare, they're focused on those social safety nets.
Makes sense. Our notes also mention self-insurance. Is that just a fancy way of saying, nope, no insurance for me?
Not at all. It's actually more common with larger companies. They basically assess their own risk and set aside funds to cover potential losses instead of paying premiums to a traditional insurer. It's like being your own insurance company.
Whoa, that must take a lot of confidence in your risk assessment. Right. All right, let's get into those private insurers. We've got stock companies and mutual companies. They both sound, I don't know, pretty corporate. What's the difference?
The key difference is in the ownership. Stock companies are owned by, well, stockholders. They aim to generate profits for those shareholders, and they issue non-participating policies, meaning you, the policyholder, you don't directly share in the profits.
So if the company's doing great, no bonus for me. Bummer.
True. But then we have mutual companies. Here, the policyholders, they're the owners.
So I'm a customer, A&D an owner. That's interesting.
Yeah, exactly. And with mutual companies, you might actually get some money back if the company's performing well. They're called dividends, paid out from the divisible surplus.
Hold on, hold on. So I could actually get a refund on my premiums? How does that even work?
Think of it like this. The company takes any money left over after covering expenses and claims that's the divisible surplus, and they distribute a portion back to the policyholders. It's like sharing the success.
Okay, the mutual thing is making a lot more sense now. It's like a high five for being part of the company. Now, there are more players out there, right? Our notes mentioned fraternal benefit societies. What are those all about?
Ah, yes. These are interesting. They blend insurance and social good, often revolve around charitable activities, community involvement, like the Knights of Columbus, for example.
So it's like insurance, but with like a side of camaraderie. But wait, I read something about them making members pay when someone had a loss. That's intense.
That was the early model, the assessment system. But these days, most of them operate more like traditional insurers, using premiums and reserves.
That makes a lot more sense. All right, so we've got the different company types, but how do we actually get these policies? Who are the key players in this process?
That's where insurance producers come in. They're the bridge between you and the insurance company. You've got two main types, agents and brokers. Agents represent a specific company, while brokers work for you, the buyer.
So what are the big differences between working with an agent versus a broker, and why should I care?
It boils down to who they represent and what options they offer. Agents are focused on their company's products, so their choices are more limited. Brokers, on the other hand, can shop around to multiple companies to find the best fit for your specific needs. Knowing who's advocating for whom in this whole process is crucial. It's a big financial decision, after all.
That's a super practical point. All right, let's go behind the scenes. What happens after I hand over that application? Feels like a bit of a mystery.
Oh, there's some key departments working hard back there. First up, underwriting. Think of them as the gatekeepers. They're evaluating risks, deciding who gets covered and at what price. They look at your application, health history, all those factors to assess the likelihood of you making a claim.
So they're the ones deciding if I'm a good bet or not.
You could say that. Then you have the actuarial department. These are the math wizards. They crunch the numbers to determine premiums, manage reserves, analyze claims trends. They're the financial architects making sure the whole system works.
The unsung heroes of insurance.
Sure. And finally, you've got the claims department. These are the folks you'll actually interact with if you need to use your insurance. They handle the whole process, assessing your loss, verifying coverage, and getting you the benefits you're entitled to.
The ones who come to the rescue.
Exactly. They're there to help you navigate that whole world of claims and get back on your feet.
Okay, the inner workings are much clearer now. You mentioned agents, brokers. Are there other ways insurance is sold? It's the digital age, after all.
Oh, absolutely. Technology has opened up a whole new world. You've got career agencies, they focus on training new agents. Then there are PPGAs, they support those already established high-performing agents. Independent agencies, well, they offer a wider range of choices because they work with multiple companies, unlike captive agents who are tied to just one. And of course, the internet. You can buy insurance directly from a company's website now, often without even speaking to an agent.
Wow, so many choices these days. But who's making sure all these players are playing fair? Who keeps the industry honest?
That's where insurance regulation comes in. It's actually a pretty fascinating story. It's had this back and forth between state and federal oversight over the years. Early on, states had the power. But then a Supreme Court ruling flipped the script, declared insurance subject to federal regulation.
Wow, a real power struggle. So who won?
Well, it wasn't a clear victory for either side. Congress stepped in with the McCarran-Ferguson Act, which created this kind of shared oversight that we have today.
A compromise, then. But how does all this regulatory back and forth actually affect me as a consumer?
It's all about protecting your rights and interests. Take the Fair Credit Reporting Act, for example. It makes sure that any information used to determine your eligibility for coverage, things like your credit report or medical records, well, it ensures it's accurate and used fairly.
So that protects my privacy, makes sure I'm not judged based on, bad information.
Precisely. And then we've got those strong fraud laws protecting both consumers and insurance companies from those dishonest practices. They make it a criminal offense to lie or misrepresent information related to insurance transactions.
Okay, so lying on my application is a big no-no. Got it. But who's actually enforcing these laws, keeping an eye on the whole industry?
Well, there are a few key players. The National Association of Insurance Commissioners, or NAIC. They set standards and create model regulations for the industry. And then you have the National Conference of Insurance Legislators, or NCOIL. They advocate for that state-level regulation.
So NAIC sets the blueprint, NCOIL makes sure states are following it.
You could say that. And then we have rating agencies, like AM Best. They assess the financial strength of insurance companies, giving them ratings based on their reserves, their investments, overall stability. This helps consumers choose companies that are, well, financially sound, likely to be around for the long haul.
I had no idea these ratings even existed. So it's like checking a company's credit score before trusting them with my insurance needs.
Precisely. It's a really valuable tool for any insurance buyer.
This is so helpful. I already feel so much more informed and empowered to navigate this whole world.
And it's what we like to hear. But before we move on, I'm curious, what are your initial thoughts about the people behind all this?
Oh, you mean like the agents, the folks working behind the scenes at the companies?
Exactly. What's it like to actually build a career in the insurance industry? That's something we'll explore in the next part of our deep dive.
We're back. And now I'm really interested in those people, the ones who make this whole insurance system work. What's it actually like to build a career in this field?
Well, let's start with those on the front lines, the insurance agents. They're connecting with clients, understanding needs, finding the right coverage. It takes a special blend of skills to really excel at this.
Oh, what kind of skills are we talking? Is it all about being a smooth talker?
Well, being a good communicator is definitely key. Why? Agents are constantly interacting with people, building relationships, explaining often complex concepts in a way that, that anyone can understand. But it's more than just talking. You need empathy to connect with clients on a personal level and really understand their needs.
So it's like a salesperson, a counselor, Andy, a teacher, all in one.
Yeah, that's a great way to put it. They need to be persuasive, empathetic, and knowledgeable about, of course, the products they're selling.
Sounds challenging, but also potentially rewarding. What are some of the different paths someone can take as an agent?
Well, as we mentioned before, you have captive agents. They represent a single insurance company. And then there are independent agents who can offer policies from multiple companies. Captive agents really become experts in their company's specific offerings, and they have that direct line to their underwriting and claims departments.
So they're like brand ambassadors really digging deep into one company.
Exactly. Independent agents, on the other hand, have the flexibility to shop around, find the absolute best fit for their clients, but they also have to manage relationships with, well, with several companies, which can be more complex.
It's like running their own little insurance marketplace. So many choices. But we can't forget about all those other people working behind the scenes at the companies, right? What other types of jobs are out there besides being an agent?
Oh, there's a whole ecosystem of roles within these companies. We've talked about underwriters, actuaries, claims adjusters, but there are also opportunities in marketing, finance, IT, legal, customer service, just to name a few.
Wow, it's a lot more diverse than I initially thought.
It is. And as the industry evolves, embracing new tech, responding to those changing consumer demands, well, there's a growing need for professionals with a wide range of skills and backgrounds.
That's good news for anyone considering a career in this field. But what about the challenges? What are some of the big hurdles facing the insurance industry today?
Keeping up with those rapid technological advancements is a major one. This whole rise of insurtech, it's changing the game in really profound ways.
Okay, let's talk more about that. We touched on InsurTech earlier. What are some concrete examples of how technology is really shaking things up?
Well, just think about the sheer amount of data that's available today. Our phones track our movements, our online activities are recorded, sensors collect information about our driving habits, our health metrics. It's incredible.
Yeah, it's true. We're all walking data generators these days.
Exactly. And for insurance companies, this data is a gold mine. It allows them to assess risks with so much more precision, personalize policies, even predict those future claims more accurately.
So instead of using like those broad categories like age, location, they can use actual data about how we live and behave.
Precisely. We're seeing this rise of usage-based insurance, where your premiums are adjusted based on your actual behavior. Safe drivers get lower car insurance rates, for example.
That makes sense. You're rewarded for being responsible. What other cool tech advancements are happening in the insurance world?
Artificial intelligence, or AI, is playing a bigger and bigger role. You've got those AI-powered chatbots handling customer inquiries, speeding up claims processes, even helping to detect fraud.
So the AI is handling the, I guess, more mundane tasks, letting human employees focus on those complex situations.
That's the idea. And then there's blockchain technology.
Right.
Now, this has the potential to completely transform how those insurance contracts are managed and executed, makes the whole process more efficient, transparent, secure.
Blockchain, that sounds familiar. Isn't that the tech behind cryptocurrency?
It is. But its applications go way beyond just finance. In insurance, it can create those tamper-proof records of transactions, which, increases trust and really streamlines everything.
It sounds like technology is making insurance more efficient, personalized, and secure, which are all good things. But I'm curious about the consumer experience. How is technology changing how WE interact with our insurance companies?
Well, we're moving towards a more digital on-demand experience. People want to manage their policies, file claims, get support, anytime, anywhere from any device. It's about convenience.
It's true. We expect everything to be at our fingertips now.
Exactly. So insurance companies are developing those user-friendly mobile apps, online portals, even integrating with wearable technology to provide those personalized health and wellness insights.
So it's becoming less reactive, just waiting for something to happen, and more proactive.
Yes. It's about empowering consumers to take charge of their own risks and make more informed decisions.
This is all fascinating, but I have to ask, what about the potential downsides of all this technology in the insurance world? What are some risks or challenges we should be thinking about?
That's a great question. One of the biggest concerns is data privacy. With all this data being collected about our lives, it's so important to make sure it's being used responsibly and ethically.
Data privacy is a huge topic right now. It's understandable that people would be a little uneasy about how their information is being used.
Absolutely. Transparency is key. Insurance companies need to be really upfront about how they're collecting, using, and sharing data. And of course, they need to implement those strong security measures to prevent breaches and misuse. Consumers need to be aware of their rights and take steps to protect their own data as well.
So it's a shared responsibility. Companies need to be accountable, and individuals need to be informed.
Exactly. Another challenge is that potential for bias. in those AI algorithms. If the data used to train those algorithms is biased, well, it can actually perpetuate existing inequalities and lead to some unfair outcomes. We don't want tech to make societal problems worse, right?
That's a really important point. It reminds us that technology is, well, it's just a tool. It's up to us to use it responsibly and ethically.
You're absolutely right. Technology can be such a powerful force for good, but it needs to be implemented thoughtfully with that commitment to fairness.
It sounds like we're on the verge of a new era in insurance, one driven by data, tech, and innovation. It's pretty exciting to think about all the possibilities.
It is. But as we move towards the final part of this deep dive, I think it's important to remember that, at its core, insurance is about people.
Yes, technology can absolutely enhance the industry, but it should never lose sight of that human element.
Well said. It's about protecting individuals, families, businesses from the unexpected. It's about providing that peace of mind, that financial security. Technology can help us achieve those goals more effectively. But ultimately, it's that human connection that makes insurance such a vital part of all our lives.
This has been so eye-opening. I feel like I have a whole new understanding of this industry, not just the, policies and premiums, but the people, the technology, the impact it has on our society.
I'm glad to hear that. It's been great exploring this world with you.
Thanks for being here. But before we wrap up entirely, there's one more aspect of the industry I'd like to discuss.
Oh, what else is there?
We've talked a lot about that traditional insurance model, but things are changing, right? There's this growing movement toward alternative risk transfer mechanisms.
Alternative risk transfer. That's an interesting one. What does that even mean?
That's what I'm hoping you can explain.
Well, it refers to methods of managing risk that go beyond that traditional insurance market. This can include things like self-insurance, captive insurance, which is basically forming your own insurance company, and even some innovative financial instruments like catastrophe bonds.
So it's like thinking outside the traditional insurance box.
Exactly. As businesses face these increasingly complex, interconnected risks, they're looking for those more creative, customized solutions.
It makes sense. One size doesn't fit all when it comes to managing risk.
That's right. And these alternative risk transfer mechanisms offer greater flexibility and control.
Sounds like a pretty dynamic, rapidly growing area within the insurance world.
It is. And it's something we'll be watching closely as that insurance landscape continues to evolve.
So we've covered those insurance basics, different types of companies, career paths, the challenges and opportunities, the social and economic impacts, and now even alternative risk transfer mechanisms. What else is there to know about this vast world?
All right. We've really gotten into the nuts and bolts of the insurance industry, but there's one thing we keep coming back to that I really want to dig into deeper: the role of technology. It seems like it's impacting every single aspect of this world.
It really is. In this final part, let's unpack how tech is revolutionizing insurance for both those companies and, well, all of us, the consumers.
Okay, let's get into it. We've talked about insert tech, but how's it really changing the game?
Well, think about all the data we generate every single day. Our smartphones, they're tracking our movements, our online activity. It all leaves a trail. Sensors are gathering information about, well, everything. Driving habits, health metrics. It's a lot.
Wow, yeah. I never really stopped to think about just how much information is out there. And for insurance companies, this data, it's incredibly valuable. Allows them to assess risks more accurately, personalize policies, even predict future claims better.
So instead of those traditional factors, age, gender, zip code, they can use data about our actual behaviors, our lifestyles.
Exactly. It's leading to what we call usage-based insurance. Your premiums are adjusted based on your actual behavior. Safe drivers get lower car insurance rates, as an example.
Makes sense. You're rewarded for being responsible. What other cool tech advancements are we seeing out there?
Artificial intelligence, or AI, is becoming more and more important. Think AI-powered chatbots that can handle customer inquiries, help streamline claims, even assist with fraud detection.
So the AI is taking over some of the more routine work, which lets those human agents focus on those trickier situations.
That's right. And then we've got blockchain technology. Most people know it from cryptocurrencies, but it has the potential to change how insurance contracts are managed and carried out.
Interesting. So beyond Bitcoin, what can blockchain actually do for the insurance world?
Imagine a system with secure, transparent records. Tamper-proof records of all those transactions. That's blockchain. It can streamline the whole process and build more trust between everyone involved.
It sounds like technology is really pushing insurance to be more efficient, personalized, and secure. Those are all good things. But I'm thinking about the consumer experience. How is all this changing how W actually interact with our insurance companies?
It's moving towards a more digital on-demand model. People want to manage their policies, file claims, get answers anytime, anywhere from any device. Convenience is king.
Absolutely. We expect instant access now in every other part of our lives, so it makes sense that insurance would be the same.
Exactly. So companies are developing those user-friendly mobile apps, online portals, and even integrating with things like wearable technology, all to provide more personalized insights into your health, your wellness. It's a whole new level of control and transparency.
So it's less about reacting when something happens and more about being proactive.
Yes, it's all about empowering people to manage their own risks and make informed decisions.
I love that idea. But of course, I have to ask, what about the potential downsides of all this tech? Are there risks, challenges that we should be thinking about?
Of course.
Mhm.
One of the biggest concerns is data privacy. With all this data being collected, we have to make sure it's being handled responsibly, ethically.
Data privacy is such a big topic now. It's natural that people would be concerned about how their information is being used, right?
Absolutely. Transparency from these companies is essential. They need to be very clear about how they're collecting, using, sharing data. And of course, they have to implement those strong security measures to prevent those data breaches and misuse. Consumers, on our end, we need to know our rights and take steps to protect our own information as well.
It's a two-way street. Companies have to be accountable, individuals have to be informed.
Exactly. Another challenge is that potential for bias, especially in those AI algorithms. If the data used to train the algorithms is biased to begin with, it can actually perpetuate those inequalities, leading to unfair outcomes. We don't want technology to make those societal problems worse.
That's such an important point. It reminds us that tech, well, it's a tool, and it's up to us to make sure it's used responsibly and ethically.
You hit the nail on the head. Technology can be a fantastic force for good in insurance, but we have to be thoughtful, committed to fairness in how we use it.
It sounds like we're really at the beginning of something new for insurance, driven by data, by tech, by all this innovation. Pretty exciting to think about what's possible.
It is. But as we wrap up our deep dive today, I think it's really important to remember, at its core, insurance is about people.
Yes, tech can make things better, for sure, but we can't lose sight of that human element, can we?
You said it. Protecting individuals, families, businesses from those unexpected things that happen in life. Providing peace of mind, financial security. Tech helps us do all that more effectively, but ultimately, it's that human connection that makes insurance so vital.
I am so glad we did this deep dive. I feel like I have a whole new understanding of the insurance world, not just the policies and premiums, but the people behind it all, the technology, the impact this industry has on all of us.
It's been a pleasure exploring this with you. It really is a fascinating field.
Thank you so much for joining us on this journey through the world of insurance. We hope you've learned something new and maybe gained a new appreciation for this complex, ever-changing industry. Until next time, keep exploring and keep diving deep.